So you've got Wall Street and you've got Web3. And right now they're not just meeting, they're on a collision course. What does that actually mean for you as an investor looking ahead to 2026? That's what we're breaking down today.
You've probably heard the saying, the past is prologue. It's especially true in finance. To really get a grip on where we're headed, we've got to first understand where we've just been.
All right, investors, hello, welcome back. This is the AI Crypto Insights channel where we give you a few minutes of AI-powered insight into the market. And, as always, just a quick reminder, this is for educational reference only. It is absolutely not investment advice. So today, we are diving deep. We're parsing the collective insights from the top analysts over at MSE Research Institute, and their focus? This huge convergence of traditional finance and Web3. Let's see what they found out.
Okay, so before we jump into predictions for 2026, we've got to rewind the clock a little. The analysts pointed to three big defining themes from 2025 that really set the stage for everything that's happening now.
First up, value regression. Basically, 2025 was the year the market said, okay, enough with the hype. The AI stories just weren't cutting it anymore. People wanted to see real earnings, real results. As one of the analysts, Dai put it, investors were asking, is all this money we're throwing at AI actually making any money back? It was a real show me the money moment.
And the second big theme they hammered on was just acceleration. We're not talking about one little thing here. Analyst Frank pointed out it was a huge systemic push. The plumbing, the infrastructure, it was all getting built out. And the big one? Institutional players, guys like NASDAQ, finally got off the sidelines and jumped right into the game. And that, right there, threw the whole tokenization trend into overdrive.
So all that acceleration, it wasn't just for show. It led to real, tangible adoption. Suddenly, tokenization wasn't this sci-fi concept anymore. It was an actual working reality. The entire conversation shifted. It went from, hey, can we even put assets on a blockchain? To, okay, they're on-chain. Now, how do we make them truly useful? How do we get the liquidity flow? Okay, so that's the backdrop. That's the foundation that 2025 built. Now, let's get to the main event, the big question for 2026. As these two massive worlds, TradFi and crypto, finally merge, where's all the money going to flow?
And yeah, this really is the multi-trillion-dollar question, isn't it? Every single investor who looks at both markets is asking this. When the Fed finally turns on the money printer, when that easing cycle really gets going, where does that first tidal wave of liquidity crash? Does it go straight into stocks? Or does it pour into crypto and light a fire under it?
So what the MSE analysts are saying is it's not really an either-or thing, it's more of a sequence. They call it the Liquidity Overflow Theory, and it's pretty simple to picture. Imagine a series of lakes. The money first flows into the biggest, deepest, safest lake. That's US stocks. As that lake fills up and valuations rise, the excess capital has to go somewhere, right? So it overflows into the next lake, Bitcoin, the OG of crypto. And then, only after that, does the water finally trickle down into the smaller lakes, the select altcoins that actually have strong fundamentals and cash flow.
This whole thing creates a really fascinating new dynamic, kind of a power struggle, actually. Think about it. When a regular stock can be tokenized and traded 24/7 all around the globe, who gets to say what it's worth? Who controls the price? And this is where the battle lines are drawn. In one corner, you've got the heavyweight champion NASDAQ. It's the regulatory anchor, it has the deepest institutional money, and the cost of being wrong is so high that it creates stability. But in the other corner, you have the scrappy contender, the on-chain DEX. It's open 24/7, it's global, and it captures all the crazy price action that happens after hours and on weekends. So the big takeaway here is NASDAQ will probably set the foundational official price, but the DEXs, they're going to be the ones pulling and pushing on that price at the margins, dictating where it goes when the traditional markets are asleep. Okay, so that's the theory. That's the big picture. But what does it mean for us? How do we actually play this? Let's get into the actionable stuff, the high-conviction sectors and strategies for 2026.
And the consensus from the analysts was overwhelming. They all pointed to the picks and shovels of the AI gold rush. Forget just the shiny chips for a second. We're talking about the absolute bedrock infrastructure that makes AI even possible. Things like the energy grid. You got to plug this stuff in, right? Data storage. All that data has to live somewhere. The space and satellite economy. And of course, the whole commercial AI and compute infrastructure.
And this quote from researcher Dai just nails it. In 2026, buying the power grid might be a more solid bet than buying the chips. The best GPUs are useless if you can't plug them in. Wow, think about that.
The bottleneck isn't the chip anymore, it's the plug on the wall. The most powerful GPU in the world is just a fancy paperweight without electricity. This is a bet on something absolutely fundamental, something you literally can't get around.
Okay, so given all that, how should you actually structure your portfolio? Well, the advice from the analysts was honestly surprisingly conservative. One of them, Frank, even said he's planning to keep about 80% of his capital in US stocks. And pretty much everyone agreed on this. Hold a good chunk of your portfolio, like 20%, in cash or stablecoins. Why? To handle the wild swings that are definitely coming, and to be ready to jump on opportunities when they pop up. So a solid base of quality stocks with a big pile of cash for flexibility. That's the game plan.
All right, let's move to the final piece of the puzzle. And for me, this is the most exciting part. The analysts started hunting for the next ChatGPT moment. You know, that one single event that could just flip a switch and trigger a massive mainstream explosion for tokenized finance.
And they came up with a few really fascinating ideas, any one of which could be a total game changer. So what is it? What's the one thing that happens that makes everybody, all at once, look around and say, oh, we can't go back to the old way. This is the future.
Okay, trigger number one, an idea from Dai is asset as currency. Just imagine this for a second. You walk into a coffee shop, you buy a latte, but instead of swiping a credit card, you pay with a tiny fraction of your tokenized Tesla stock, directly. No selling, no converting to cash first, just poof, payment made. When your investments become as easy to spend as the cash in your wallet, that changes everything.
The second potential trigger is all about the plumbing of the financial system. It's about getting fully regulated, compliant stablecoins integrated directly into traditional banking. This unlocks something called atomic settlement, which is a fancy way of saying the asset and the payment swap hands at the exact same instant. No waiting, no risk that the other guy won't pay up. And that right there, that is the giant green light that all the big money institutions have been waiting for. And the third idea is maybe the simplest on the surface, but it could be the most profound. What if US stocks just traded 24/7, 365? No opening bell, no closing bell. The market is just always on. Think of the global liquidity that would unlock. Analyst Frank thinks this alone could kick off another innovation explosion, just like the DeFi summer we saw back in 2020. But this time, it would be on a scale that would just dwarf it. So, here it is, the AI analyst verdict. In 2026, this convergence of Wall Street and Web3 isn't a maybe, it's an inevitability. And the investors who are going to come out on top are the ones who prioritize that fundamental, boring but critical infrastructure and who practice disciplined risk management. What do you think? Share your thoughts in the comments. We'll see you in the next episode.
But before you go, I want to leave you with this question to chew on. Of those three massive catalysts we talked about, using your assets as currency, fully compliant stablecoins, or 24/7 stock trading, which one do you think is actually closest to happening? And more importantly, which one do you think will have the biggest impact when it finally arrives? Let me know.